So here we are.
Cheers.
Cheers.
Here we are.
So tell me, what's been on your mind recently?
A lot. So a few months ago, I saw a quarterly report from the FDIC that showed the losses in the whole banking sector to be massive. And the chart blew me away. And so when you look at 2008, the losses in total, the whole banking sector was about 70 billion. And as of the second quarter of this year, they were 515 billion.
Wow.
Right. And so I'm like, shit, if this thing blows up, who knows where the stock market goes? Not up, that's for sure, but how far down is it going to go? People are going to get destroyed all over again. 1Ks get cut in half again, like they did in '08, again, like they did in 2000. So when you and I put money in the bank, we have a checking account, maybe a savings account or even CD sometimes, but just leave it at checking and savings. The bank doesn't keep our money like in a safe, like they used to. They keep a small percentage of it based on federal regulations, and they loan out the rest or they invest the rest. So a lot of that extra cash they buy bonds with. And when the Federal Reserve started raising interest rates 2 years ago, the value of those bonds that those banks put all that money into went down. So they have losses on their balance sheet. Now it's in bonds, but they have to wait for those bonds to come due. Who knows whether it's 3 years, 5 years, 10 years, 20 years. They have to hold those bonds till they mature to get their money back. But some of those bonds are, they've got mortgages on the balance sheet. Could be commercial real estate loans. Like a lot of the big regional banks, and we'll talk about this in a minute, but like the Fed or the CNBC, those people will say regional banks, and they want you and I to think that's our small local banks like we have, but it's not what they're talking about. They're talking about massive hundreds of billions of dollars. Those banks do have commercial real estate loans, and there's like 1.2 trillion coming due this year. Well, what happened during COVID? Well, what happened during COVID was everybody was home. Nobody was going to the office. And some people have started to go back to the office. Some companies are demanding it, but those office buildings are still largely vacant. And they've got this loan coming due where the value of the property has dropped a lot because the income from the rent has gone down because they're vacant. So how are they going to roll these loans over? Is the bank going to take the loss on that loan? What's going to happen? So those are part of those unrealized losses also. It's not just your bank bought a treasury bond, then they can wait 10 years and the government pays them back. That's not what this is. A lot of it is loans that are going to go bad.